This video is an uncovered Japan company research report on SEC, ticker 3741. SEC, or Systems Engineering Consultants, builds real-time software for systems where being late is the same as being wrong. Satellites, planetary rovers, public infrastructure, payments and control systems. The company has a rare technical niche and record backlog. The investment question is whether policy-linked demand and AI-assisted development can justify a valuation already above its own history. At the research date, SEC had fiscal 2026 revenue of 11.22 billion yen, a 16.8% operating margin, and a record order backlog of 9.07 billion yen. Those are unusual numbers for a small Japanese contract software business. But the shares traded at about 20.8 times forward earnings, above the company's 5-year average of 18.7 times. This is a quality business, whose price already assumes further delivery. SEC's specialty is software with a close, moment-to-moment interaction with a changing outside world. A satellite attitude control routine, a rover, a payment authorization, or a transport control system cannot simply retry later when something goes wrong. This is a different discipline from ordinary enterprise IT. Its difficulty creates SEC's opportunity. Customers in high-consequence settings buy proven reliability and deep technical experience, rather than selecting the lowest-cost generalist. The revenue mix explains most of the story. Social infrastructure systems was 49.3% of fiscal 2026 sales and grew 11.3%. Space and advanced systems was 28.2% and includes work tied to JAXA, autonomous driving, and robotics. Together, those two fields made up 77% of revenue tied to public or policy-driven demand. Internet was the fastest-growing smaller field, while mobile network declined and is now only 6.6% of sales. From fiscal 2022 to fiscal 2026, revenue grew from 6.56 billion yen to 11.22 billion, a 14.4% compound annual rate. Operating profit rose from 1.06 billion to 1.88 billion, compounding at 15.3%. Fiscal 2026 marked the 9th consecutive record profit year. This is not a one-off project spike, it is a multi-year record, built on technically demanding work and public sector demand. Operating margin has held in a narrow 16 to 17% band for 5 years, high for contract software. Fiscal 2026 margin dipped slightly to 16.8%, as SEC raised base pay and increased research spending. Ordinary profit exceeded operating profit because of non-operating items, including research subsidies. Net income also benefited from a wage increase tax credit. The cleaner measure of recurring execution is therefore operating profit, not the temporarily flattered bottom line. SEC's balance sheet is unusually strong. At fiscal 2026 year-end, the equity ratio was 82.9%, short-term borrowing was only 36 million yen, and cash plus investment securities totaled about 4.4 billion yen. There is no goodwill. The caution is working capital. Long public and space projects are recognized over time, but billed later, producing a roughly 210-day receivable cycle. Cash flow can therefore look volatile in any one year, even though the multi-year cash generation record is sound. SEC's moat is neither scale nor consumer brand. It is decades of accumulated know-how in systems that cannot fail, combined with trust from agencies and technical customers. The work creates a library of edge cases, proven code, and engineer experience that is hard to hire or replicate quickly. The same narrow focus has a downside. With only 365 employees, a single troubled fixed-price project, or a shortage of specialized engineers can have an outsized effect on earnings. The base case assumes revenue reaches 11.75 billion yen in fiscal 2027 and 13.24 billion by fiscal 2029, while operating profit reaches 2.28 billion. Social infrastructure and space growth are expected to benefit from digital government, defense, and space budgets. The critical assumption is AI-SDM, SEC's AI-assisted development initiative. If it lifts output per engineer, margins can improve. If wage and outsourcing inflation outpace that productivity, the man-month model remains the constraint. Valuation is the central counterweight. SEC traded at about 20.8 times forward earnings, above its 5-year average of 18.7 times, and at a premium to the broader peer median near 15.4 times. Its closest business comparable, ESOL, traded at a similar premium. That suggests the market understands the value of real-time systems expertise. It also means investors have limited protection if the expected growth or margin improvement fails to appear. The report's 3-year scenario analysis makes the trade-off concrete. Against a research date share price of 3,210 yen, the fiscal 2029 bear case is 1,759 yen, the base case 3,394, and the bull case 5,024. The base case is only about 6% above the starting price, because earnings growth is largely offset by a normalizing multiple. The tails depend on the same two variables: productivity versus wage pressure, and the durability of policy-linked demand. SEC is a rare Japanese software specialist with a durable, real-time niche, high margins, a fortress balance sheet, and a record backlog connected to public, space, and infrastructure demand. The investment risk is not hidden. Engineer capacity, wage, and outsourcing costs, AI SDM productivity, and a full valuation will determine whether the business can turn its technical quality into shareholder returns. This is research for education, not a recommendation. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.